It's a good day for MEG Silver investors. The producer has released their fourth quarter financial results, which were positive. But more importantly, the company has announced an effort to increase shareholder returns in the form of dividends. And not just one dividend per quarter, but two. Kind of. What are we talking about? Let's dive in. Let's start off with the high-level results here before we get into the dividend stuff. As we outlined in our coverage on MEG's third quarter earnings, they report numbers a bit different than peers, which is a result of holding a 44% interest in their principal asset. Meaning rather than reporting revenue at the corporate level, they report income from their flagship asset, Juanicipio. In 2024, MEG Silver saw top-line income from Juanicipio of $93 million, a 43% improvement over the $65 million recorded in 2023. After general and administrative expenses of $15 million, which increased from $13.5 million last year, and exploration and business development expenses of $600,000, the company reported operating income of $77 million for the year, which was a 52% improvement over the $51 million recorded in 2023. After interest income and financing expenses, income before taxes grew to $83 million, up from $54 million last year. Net income overall grew from $49 million in 2023 to $78 million in 2024, a 60% improvement year on year. Adjusted EBITDA, meanwhile, doubled, going from $98 million last year to $187 million this year. On top of that, 2024 also marked the first year that MEG Silver received a dividend from Juanicipio, which totaled $26 million, which, when added to the $97 million in interest and loan repayments made to MEG during the year, brings 2024's capital return to $124 million. This led to MEG ending the year with a cash position of $162 million and an inaugural fixed dividend to shareholders. Okay, before we get into the results from Juanicipio, let's first look at this new dividend program, since we're already talking about it anyways. The new dividend has two components to it. First is the fixed portion, which is set at 2 cents per share and is to be paid out quarterly. Then there's what we'll call the floating component. Basically, MEG has stated that provided the average realized price of silver remains above $20 an ounce, the company will provide additional returns to shareholders. This part is a cash flow-linked dividend, which aims to be roughly 30% of cash flows from Juanicipio that MEG receives every quarter. It's also linked to net cash metrics as determined by the company's board. For the inaugural dividend, shareholders are to receive that 2-cent fixed dividend alongside an additional cash flow-linked dividend of 16 cents, bringing the total dividend to be paid out for the most recent quarter to 18 cents a share, which is to be paid out on April 21st. MEG, of course, also has an outstanding normal course issuer bid for the purpose of share buybacks. However, no shares have been purchased under the current program. Okay, so how did MEG's main asset do in 2024? Well, 2024 saw the mine record $627 million in total top-line revenue, which was a 42% improvement year over year from the $442 million recorded in 2023. The boost was off the back of silver equivalent ounces sold climbing from 20.8 million equivalent ounces to 23 million equivalent ounces. Broken out, Juanicipio sold 16.6 million silver ounces, 33,000 ounces of gold, 36 million pounds of lead, and 56 million pounds of zinc. Guidance had called for the production of 16.3 to 17.3 million silver ounces, which was to lead to the sale of 14.5 to 15.4 million ounces being sold in 2024. These sales followed the company producing that metal at an average equivalent silver head grade of 712 grams per ton, which was an improvement over the 691 grams per ton average recorded in 2023. Silver grades specifically, however, fell from 472 to 468 grams per ton, but this still beat prior guidance that had called for head grades of between 420 and 460 grams per ton silver. Cash costs per silver ounce sold dropped from $6.07 to 88 cents an ounce. And no, I didn't say that wrong. Well, cash cost per silver equivalent ounce sold from $10.72 to $8.67 an ounce. All-in sustaining costs, meanwhile, halved from $10.32 to $5.54 per silver ounce sold, while AISC on a silver equivalent ounce basis fell from $13.85 to $12.03 an ounce. Guidance had called for all-in sustaining costs per silver ounce sold of $8.50 to $9.25 an ounce. The mine itself, meanwhile, posted positive net income of $202 million for 2024, as compared to $130 million in 2023. MEG's 44% interest, after the interest on loans is included, totaled out to the previously mentioned $93 million. So, how are things shaping up for 2025? Well, Fresnillo, the operator of Juanicipio, is calling for 2024 production between 14.7 to 16.7 million ounces of silver, which is based on head grades of 380 to 430 grams per ton silver and 1.2 to 1.4 grams per ton gold. Production is estimated to be weighted towards the second and third quarters. And well, that's all we've got for now in terms of guidance for the year. Comprehensive cost and production guidance is scheduled to be provided at the end of the first quarter, in line with the release of Q1 results. In the interim, I guess, shareholders are just expected to hope for the best. All right, let's wrap it up. 2024 was a good year for MEG Silver and their Juanicipio asset. That much is clear, simply based on the launch of a formal dividend program. No, the yield may not be the greatest, roughly 3%, assuming each quarterly dividend is about a total of 18 cents, but it's better than what investors thought they were getting as of yesterday. Outside of Juanicipio, the company in 2024 also optioned out their Cinco de Mayo asset, which, if fulfilled, will see 20,000 meters of drilling completed on the property at minimum, after which they'll own 19.99% of Apollo Silver, which, given the history here, doesn't seem like a bad deal for MEG if things go as planned. And given the current precious metals environment, puts the company in a good place for years to come. All right, everybody, if there's any other stories you want us to cover, as always, please let us know in the comments section. I appreciate all the feedback we're getting. I promise you guys, we read it all. We may not respond to everything, but we are reading it. So I appreciate all the comments we're getting. All right, everybody, thanks for watching.